Good morning, everybody. Welcome to the Flow Show. We are Wednesday, 30th of October, nearly at the end of the month. We've got one big event from the UK coming, the budget today, which we'll talk about shortly. Just before we get stuck into things, just want to bring you up to date on an offer we've got on our trader funding program that's been running all of October. You can get 20% off the price of one of the assessments. Any of the assessments. I've put the link there in the Zoom chat function. All you need to do is sign up for one of the assessments, use code OCT20 and get yourself 20% off one of those assessments. Don't forget also you can get free access to ForexAnalytix as well. So if you take the smallest account, you get, where is it? Oh, it doesn't say. 14 days. There we go. 14 days free access. Take the next one up. You get a whole month's free access. So you pretty much get your money back when you take one of those accounts. Obviously, you can get up to $1 million account size. So have a crack at that. As I say, 20% off for the remainder of the month. You've only got 2 days to take advantage of that. Right. Morning, Kay. How's it going, mate?
Morning, Ryan. Yep, everything is going fine and dandy. We are ready and waiting. And by the way, while you're on that discount for the trader funding program, we also have our $1 for 10 days access to our chat room. So for those who are not in there and want to take advantage of this offer that lasts for 10 days, just people know that it will cover the US elections, and so there's no time to waste. If I were you, I would get in our chat room. It's virtually for free, but nothing is free anymore in this world. So we have to charge $1, right? The symbolic dollar. But yeah, I'd say for those who are not in our community, this is the time to try us out, I'd say.
Yeah, and fair point, well made. And also you can get access to the full price with a special Forex Flow discount of 20% too, which will be the lifetime of your subscription. So if you sign up for the full package of ForexAnalytix, just use code FFL20 and that'll get you 20% off that as well. See, discounts all over the place. It's never been a better time, cheaper time to get into our platform. But as Kay says, yeah, $1, 10 days covers you over the election. So if you've been thinking about it, you know, what's $1? Okay, it's not, you can't even buy a cup of coffee for $1 these days. Right, let's crack on then. See what's going on in the world. Over in Japan, Economy Minister Akazawa said they are closely monitoring currency moves, so still got their eye on their trading screens amongst the political turmoil. It looks like PM Ashiba might be forced to go down the route of running a minority government. It looks like a lot of the opposition parties are turning their noses up at a coalition, so he may be forced to go in alone and run that minority government, which means he can still govern, albeit with 2 hands tied behind his back in terms of getting things passed in Parliament. But it's an ongoing situation that we need to keep an eye on. On the data front, we had a small bit of data out. Japanese consumer confidence, household confidence dropping to 36.2, was only expected to drop 2 points, went down 7 points instead. So again, probably a lot of the political noise in that as well. But that's one of the numbers that the government would want to see ticking higher. Just get the momentum or keep the momentum going in terms of getting prices up, getting wages up, getting the economy moving. So it's just one of those little numbers we may need to watch in the future, but it's not going the right way at the moment. Over in Aussie land, we've had a turn in the data. Pretty much all the CPI measures came in lower than the prior month. Only this quarter-on-quarter number went up. Some not going down as much as was expected. For example, the Q3 year-on-year CPI was expected to fall from 3.8 to 2.3, came in at 2.8. So there's still some stickiness there, but pretty much, as I say, all the numbers coming in lower. So inflation is going the right way, albeit slowly, for the RBA, which should keep their fingers off the hike button for a bit longer, and might even get it moving a bit further away. There are some in the market who are thinking about a December cut from the RBA, but I don't think any of these numbers put them in that sphere, ready to turn to a cut just yet, given their slant recently. But let's say they might be on their way, and it's something I've been expecting for a while now, that they were unlikely to hike again, and at some point they will be playing a bit of catch up with everyone else. We might just be seeing the start of that. Anything you've seen out of that data or Japan yourself, Kate?
Well, knowing Bullock, she's probably going to hang on to the highest number, the trim mean or that weighted mean Q3, saying that it's still above the 3%. But the headline CPI dropped within their target range in Australia. Sorry, they have a target range, right, between 2 and 3%. So I kind of understand why people are looking at those numbers and say, well, look at the decline that we had. If you just look at the headline decline, it did drop a full percentage point. So that gives a bit of argument, perhaps, to expect a bit of a change in tone. But as you say, knowing that Bullock is a hawk, that is probably going to outweigh these better inflation for the people in Australia data. Yeah, I'm quite on the same line as you are, unless they want to surprise markets in December. Just give something for the Christmas stockings.
Yeah, that'll be something. But yeah, I can't see them the way they're sitting at the moment. I can't see them moving towards a cut on this one, then, unless those year-on-year numbers, because they have moved to giving monthly numbers as well now, not just quarterly numbers. So you can see the September numbers in there. So yeah, maybe if that does keep going down, we've got a couple of months yet, so we might get a little surprise. But yeah, we'll see. I reserve judgment, and that's even as much as I would like them to cut being short Aussie dollar, but you've always got to be objective in this game. Right, over at the SMB, and Schlegel says that the SMB is now focusing on normalising policy. Further rate cuts could be necessary in the coming quarters to maintain price stability. The SMB stands ready to be active in FX markets as necessary, and the SMB toolbox still includes negative rates. Over a bit more data, it's GDP day. France kicked things off with an improvement over expectations, coming in 0.4%, was expecting 0.3%. Jelly and ice cream all round there for a whopping 0.4% growth. Over in Spain, we've got some CPI data, which is looking like the ECB bods might be right, that we might be seeing a pickup in inflation into the end of the year. We saw a pickup in their core number, a pickup in their year-on-year number, a pickup in the HICP number, which is the Eurozone measure as well. So small pickups. They also beat on GDP as well, coming in with some half decent numbers, 0.8% quarter on quarter, 3.4% year on year. Spain has been one of the shining lights in the Eurozone in terms of economic performance. I'm surprised they haven't come out with a little dig at Germany yet again, that they've done previously. Over in the Germans, they didn't start off on the right foot, saw unemployment rising higher than expected, 27,000, the unemployment rate going up to 6.1% as expected. Over in Italy, GDP came in a little bit softer than expected, flat on the quarter, 0%, 0.4 year on year. And then we've got the German regional numbers, which have seen some quite significant jumps. Again, that's ticking the boxes for some of the ECB bods, seeing inflation coming higher into the latter part of the year and into over the coming months as well. So those numbers coming in hotter, which has sucked a bit of life out of rate expectations, as you can imagine, for the ECB. We're now seeing a 22% chance of a 50 pip cut in December versus 45% before the data. GDP in Germany, a bit of a surprise as well. It surprised me because we were having a chat in our room saying that is all the negativity in the expectations. I said it'd be a surprise if it beats those expectations or doesn't come in worse. And it came in better. Still crap, 0.2% quarter on quarter, but it wasn't a negative. So that moves them out of recession because they've had 2 quarters previously negatives. Year on year, not as crappy, down 0.2%. Still nothing to break open the baby sham with, but it's better green than more red in Germany. We've had ECB bods out as well. Centeno, he was talking to Economist Stream yesterday, said a 50 pip December cut would only be driven by the need to avoid undershooting on inflation. He said a cut in December is likely, but not cutting is also a possibility. He's one of the big doves there. So he's basically saying a 50 pip cut would be a bit of a worst case scenario if things are really crapping out in terms of inflation. Otherwise, it's likely to be a 25. But there is the possibility that they stay on hold as well. Over in the US, checking through some of the data from yesterday, we've got a bit of house price data, a bit of softness seen in the S&P Core Logic, the old Case-Shiller numbers, particularly on the year-on-year numbers, those coming down a bit. Not as much as expected, though. The 20 city number coming down to 5.2 from 5.9. The national number coming down to 4.25 versus 4.85 prior. So still house price gains, but they're just easing off a bit. That might be a bit of reflective of the recent more hawkish tilt from markets about rates not coming down as fast as expected. As you can see, that's for August data as well. Then we've got consumer confidence coming out, which beat pretty much on all components. We also saw 1-year inflation expectations rising again to 5.3% from 5.2%. So there's still no let up in consumers' expectations for inflation. We still see higher prices ahead. Jolts surprise to the downside, a bit of a sizable miss, which undid pretty much a lot of the jump we saw last month. That number also got revised down, as you can see there. Now, as bad as that looks, my old mate Michael Brown did throw up a bit of an explanation that the survey date or the reporting date for this was bang on when Hurricane Helene came through. So there's likely to be a bit of a skew in there. So this number may not be as bad as what it sees there, but we've been talking about that, and we're going to see that impact likely through the NFP, maybe the ADP as well today. So a lot of weather skew, a lot of strike skew, as we've been speaking about coming into that data. For the Fed, there's been a Reuters poll. 103 out of 111 economists see the Fed cutting the rate 25 pips in November and December. So 8 others have got a different opinion, but that's a hefty amount, seeing 225 cuts coming in. Kay, did you take anything out of that data yesterday from the US?
Yeah, as you say, the weather is playing a role, and I think it may do so as well for the upcoming NFPs and for other indicators that we are going to have. If I'm not we'll have the ADP today as well. So as we have been talking about this jobs market in the US, I again think, as we've been saying already, that we need to take the whole picture as one block. Starting with the jolts and then ending in the NFP and the unemployment rate, of course, which if it's a bumper number will be put in doubt again by the household survey, I have no doubt. But again, I think we need to take the whole US jobs market as like a block of data coming in. So, and this time, all those data could be impacted by hurricanes and other weather events. So, it could be that we have a little bit of a messy picture this week in the U.S. jobs market. That's how I look at this specifically right now. And it's probably going to also impact, depending on how this block comes out, impact how the yields are evolving going into the election. So it is going to be an interesting watch, which next week could be already all forgotten once we hit Monday and Tuesday.
Yeah, absolutely. And just looking at the data ahead, as you can see there, we've got that ADP expected in at 110. Obviously, it's very loose compared to what the NFP is, but it just gives the market a bit of a directional input. Whether it's much higher or much lower, the market's always going to move on ADP if there's a big variation there. Yeah, go on.
Did I see that correctly? That some expect the weather impact to be about 70 or 80K on the NFPs negative on come Friday. I'm not sure if I saw it correctly, but I've got this number in mind.
There's been loads of numbers thrown around. I can't remember which Fed head it was last week. Let me see if I can find out. Yeah, I can't remember. It was one of the Fed's heads said it could be impacted by 100,000.
Yeah,
I've heard all sorts of numbers. We got between 30 to 50,000 impact from strikes. 50 to 100,000 impact from weather. So, yeah, it's up in
I think it's just important the fact that we need to be prepared for some distortion in the numbers due to those weather events.
Yeah, as we've been saying, it seems like we played just as much a guessing game over the amount that might be skewed as opposed to the amount of the jobs numbers actually going to be. So I probably should have done a NFP compo for the skew numbers as well. But yeah, one of the Fed heads said 100,000, and other people have said, I say, 30 to 50K for the strikes. So big impact. And as I said yesterday or Monday, the market is obviously leaning for a bad number based on the skews. So if it is a good number, another 250 or something like that, it's going to catch the market by surprise. And I think that's the biggest price risk. If it's a crap number, the markets go, weather strikes, and it's ready for it. But back to today anyway, we've got GDP flash from the US. So we'll get to see whether this growth exceptionalism is keeping it up over there in the US. It's one of these wonky ones where we get the PCE numbers as well. We do get PCE data properly tomorrow, but these will be forecasts that might take a little bit of steam out of that data. But yeah, GDP numbers coming up later on. Right, what else have we got? Mr. Macklem has been out. He's been doing the rounds recently quite a bit. I think he's been out every day since the Bank of Canada meeting. Not too much to be offered from him. He says if the economy evolves broadly in line with projections, expect further policy rate cuts to support demand and keep inflation on target. He says he's starting to see some impact from rate cuts, which could be taken in a less dovish slant, because if they're starting to see the impact, if those impacts are growing in size, and could mean that they may take their foot off the gas pedal in terms of cuts, just so they don't end up doing too much and pushing things too far one way. So starting to see impact from rate cuts. We've got a potential end to one part of the saga going on in the Middle East. There's been reports from various ministries, IDF, that they've completed their mission in Lebanon or their targets in Lebanon. And we're moving towards maybe getting some sort of agreement. Netanyahu last night was holding discussions with several ministers regarding the contacts for a political settlement to end the war in Lebanon. That should be noted, Lebanon is just one part of this whole thing, but it seems that might be coming to a resolution, which is fine. That's one thing done. Means they can move on to potentially getting the other part done in Gaza and whatnot. So we are potentially heading towards at least, let's hope it's more, a short-term pause in things. Not seeing too much movement, Kay, on risk on those headlines. We obviously had the big move after the limited Israeli strike the weekend. Do you think there's any more room to manoeuvre if we get any of these deals?
Well, I would have somewhere thought so, but the thing is now we are in this mixed up like this big thing about the elections as well, and that can overshadow perhaps temporarily what's going on in the Middle East. But I would suspect that if they come to some more clear resolutions, we may see a bit of setback in some instruments that have been trading on the back of Middle East. Now, don't look at oil, because they really hasn't traded Middle East shenanigans for more than an hour at the time. But I'm thinking about something like partially perhaps the metals or gold, although, as I said, it's still a mixed bag, because that also is now ahead of trading the elections. But yeah, I could see if we get some resolutions, we should see a bit of stuff coming back, and I'm actually particularly thinking about things like gold, for instance, or some moves in Norwegian kroner also on the back of oil, if that would move. I would expect it to be, but the market is not showing too many signs of it right now. Could all come at once after the elections.
I agree with that. Right, you got anything else you want to bring to our attention, mate?
Yesterday we saw this nearest to Fukushima nuke plant restarting in Japan finally, and but there are already a bit of issues if they want to restart other nuke plants, because people who were before the big quake working in nuclear plants have most of them, of course, been either sacked, or they went to look for different kind of jobs, and now they seem to have trouble finding people to run those nuclear reactions. So that may slow the already very slow process due to heightened safety regulations over there in Japan. But it is something that we should keep an eye on in those restarts, because if we are gradually going to get more of them restarted, that would considerably reduce the Japanese energy bill, right? Because now they are, since the stopping of all those nuclear reactors, their energy bill is absolutely humongous and moves around with oil and electricity prices, of course. But if they would really start up more of those reactors, then that may start to have an impact on the Japanese yen. So that's something that I would at least keep a very close eye on.
Yeah, and we might see that in some of the trade figures as well, less imports on that side.
And it may also mean that towards the end of fiscal year, you're seeing more impact from the exporters than the importers. It's going to impact flows if we see more restarts. So that is something that is going to go on for, I guess, more months rather than weeks, but something worth keeping an eye on.
Yeah, very much so. Right, let's have a look at what's going on in prices at the moment. Euro dollar, we'll kick it off there. It's small steps for this one. We had that little test down towards the prior low, 107.60. Again, it came up short, like this low here, but the fact that it made a new low below this one was a bit worrying at the time. But it's bounced there, so this area is now solidifying even more as your support point, and as you can see, it's doing a bit more in time length of holding support that it has done at any part of this drop from the 112. So it's got a bit of a base to build on here. It's got above the small levels, 108, 108.10. Got above my 108.30, just about holding it at the moment. And I think this might be key. If we hold this 108.30 level, then it gives us a shot at trying to have a go at this 108.70 level. But I'm not expecting anything gangbusters here. You know, we are getting closer and closer to that election, closer and closer to when traders are going to want to have potentially less risk on the table. But levels wise, still moving pretty slowly. But if it holds this 108.30, yeah, it's got every chance of having a go towards the top end of my level, 108.70. And if it's above there, then maybe something else is cooking and we're just starting to turn around the trend. But if we're back below, then we're just going to be messing around back down here and going sideways from there on in. So I think in this one, if you're buying it off the bottom, you've got to be looking to take some profits when it's on the table, partials or otherwise, just protect against further failures to the upside. Aussie Kiwi is one, as you guys and girls will know, I've been sitting on the short side waiting for this potential RBA turn. The data helping out a little bit with that. We're under my 110, 120, well, 15, 20 level here. That's been a big long-term level. We're edging down 109, 45, 50-ish around here. It's not a huge level, but it's had a bit of action. I'm really waiting to see if we get a move down to the old magnet, which for those of you who have not seen it, this is why it's a different color line, because this is a level we have gone away from and come back to time and time and time and time again. It really is quite an amazing line, like the old 146, 45 odd in Euro CAD. Bit of an amazing line. It's just one of these things. Price likes to come back here, so we've had the move up here. I haven't been filled on any more on the top side. I was trying to get some in near that 111 level, but maybe this is heading the right way now, based on what's going on in Australia and the data. I know there's others in the room who have been sitting on the short side as well. I know is it Brian here on Zoom, who's also on that side as well. So touch wood, we're getting some movement, guys and girls. Let's hope it continues. Dollar CAD, I had a little nibble in this one yesterday, just after all the data and whatnot. I thought it might be one that springs back from the dip, which it has done. That dip just below 139s, and it's bounced back. It's keeping this momentum going, so we're now properly holding above this 138.60s area. So every chance still that we go and have a look firstly at that. Oh, let's go onto a proper site. Firstly at this prior high up at 139.77, and then obviously the big 140 is up here. It's really going to be a big test for this move. This has been a really strong move. If it's going to go, this is what it needs to break that, and we could be off to the races. But if it doesn't, that's going to potentially keep us in the range, and this might be running and coinciding with the election, so it could be a bit of a springboard or a bit of a sledgehammer.
Yeah, and I think that is what's being traded of late. You see dollar CAD remaining bid, dollar MEX remaining bid. That is part of your Trump 2.0 trade, which is where we probably will try to bin the USMCA, or at least renegotiate it again. And Canada took a while to start to react, but is now following kind of the same path. It's all like part of one big front-running trade in case we get a red sweep and Trump can do whatever he likes. This is part of that trade. If I would be looking at the dollar, just the dollar, I wouldn't really be in this trade. Perhaps more like a cross, Canada short against something else. But Yeah, and especially also, and then I'm going to straight away reply to what Ali just said. Month-end flows, yes, the month-end flows should, in theory, be a bit negative dollars, but it's Canada is perhaps a different animal. I agree on the direction until the elections. Or until the day before the elections, right? I mean, because I think if we continue like this and a few other instruments, I do think that some of the front running for a red sweep are going to be tempted to take some profits as well. I think the hump, or your hurdle is tomorrow, the last day of the month, for the dollar part of it.
Yeah, no, I agree with that. And yeah, I mean, just for good order's sake, this is I'm not in any sort of big trade here. It was merely it was half a boredom trade yesterday on the data. I didn't read that data as being bad. We saw the dollar dip, and I thought I'd have a little pokey in dollar CAD. So I'm up, got margin. I'll see where it wants to go, and but it's not going to be a big deal. My stops at entry +1, so whatever way I'm making money. Right, what else? We had a decent hold down at the figure yesterday. We had a little poke under it by a couple of pips, but we held the 83 level. We've been seeing fixed moves in the quid all day yesterday. That was one of the currencies that we're seeing a lot of action in there. It's proved quite a solid hold, and then we've had some better data out the Eurozone, hotter inflation numbers. So the Euro side of this thing is going up. We better talk about the budget. Not that I want to spend a huge amount of hours on it because we've talked it to death already. But we've got the UK budget now. Again, just to give you the broad strokes, the pound isn't going to move on the small taxes. Okay, it's not going to move on things that are going to piss people off, like winter fuel payments, bloody bus subsidies and all that sort of crap. Okay, so you're going to hear a lot of commentary around every item of the budget, whether it's good or bad for people in the UK. Okay, but the small shit doesn't matter. What matters are things that are going to impact businesses, going to impact investors, going to impact big sectors, if you like housing, property, that sort of thing. Anything that's big taxes there that's going to cause people to get out, sell houses, renters, people who are landlords, who own a lot of property. If they get hammered on taxes, that's going to hit house prices, that's going to hit commercial real estate, that sort of thing. Those are the sort of areas you want to focus on if you're going to be sitting through this budget. For example, the minimum wage is expected to be hiked 6%, which obviously sounds good for people on a minimum wage. Great, but that's not good for people who are employing. It may mean they hold off employing people because their costs are going up. It may mean they lay off people because those costs are going up. So that's the sort of impact those sort of numbers has potentially on economic data moving forward. So those are the items you've got to look at. Look at what it means for businesses. Look at what it means for investors. We've had pretty much most of what's going to be coming, although we're still short some of the numbers, like what are the final numbers going to be for capital gains tax? What are the final numbers going to be for national insurance? Again, impacting businesses. So yeah, if you're not from the UK and you don't know what's going on in the budget, you might be better off either just following us in the chat room, because we'll have chapter and verse on it, or just sitting this out and let the dust settle, let the reviews come in, let the headlines come in, and then take a side depending on what the pound does more. Because the other side of it is the fiscal side of it. Apparently Rachel Reeves moving her fiscal goalposts and rules creates herself almost unlimited credit card. Is she going to use it willy-nilly, or is she going to use it sparingly? If she says she's going to use it sparingly, then that will show fiscal responsibility and the market will be happy with that. If you're trading the UK, keep an eye on gilts. They have been a little bit, yields have been higher, just on the possibility that borrowing might go up and so on and so forth. Anyway, it all happens at 12:30 UK time, so an hour and a half from now. After that, sometime after that, we'll get the OBR, which is the Office of Budget Responsibility, who will then be pricing it all up, costing it all up, and that's probably where things like the gilt market will probably start moving. If they say, yes, it's a responsible, fiscally responsible budget, it's not going to push the limits of debt and borrowing and all that, then that'll be a positive. But if they come out and say, oh, you know, you're going over your levels, it's looking a bit like you're spending too much, borrowing too much, that's going to be a negative. So that's the way to play the budget. Otherwise, we'll all be sitting there to see how much the price of a pint is going up. That's the most important thing. Kay, you got any thoughts about the budget, or are you just becoming numb to it all like I am?
No, not numb to it, but it's been a long time coming. But finally, sterling reacts to the potential danger or pitfalls in the budget, and just like a couple of hours before the budget comes out, because it's been really largely ignored until now. But yeah, I think I agree. I mean, we've got to look at the big lines and what could potentially hurt investors, and if the investors are feeling like they are going to have to spend more or have less in their pockets, that could spur a negative reaction. And then you also will have to look at what impact it will have on the gilt market, because any bigger spending, which will need a bigger funding, is going to pull gilts higher. The algo reaction or the correlation reaction may initially be actually dragging the pound a bit higher on higher yields, because some of those correlation algos are just trading on the back of yield differentials. But make no mistake, bigger deficits or bigger funding needs is usually, after the first wave, not really spectacularly good for a currency. So those are the two things that we have to look at. It's how much more that they are going to need to fund, and whether the investors, companies, especially foreign companies in the UK, will have to pay more or get less. Those are the two things. Yeah.
Yeah. Overall, I'm not expecting any huge moves in the quid for this. You know, I'm not expecting 200-300 pips unless, you know, it's either a really crappy budget that's going to impact growth, or the super duper growth boosting budget. So temper your expectations, I think, for this, and remember that after today we will probably switch very quickly back to what's going on in the UK in terms of economic data and what the Bank of England are doing, and they are on a cutting path. Okay, so just factor that all in, particularly for cable, which then will run quickly straight into the US data, and then next week's election, NFPs and everything else. So you might find a quick switch between what's going on in the pound to what's going on the US side of things. And at the moment, just looking at cable, had a little look above 130, looked like it was off to the races, but here we are crapping out back below it. So this is what I'm fearful about, this rise in the euro. It might do the same sort of thing, obviously on a bit more of a smaller scale. Really, this 29, 50, 60 area is your main support point. We've had a look below, couldn't stay there. We've had a few looks below, couldn't stay there. The first sign that we go below and start to stay below is going to be a negative signal. And that means we're going to be down, testing those lows, or maybe doing something even more. So, yeah, I'm more inclined to trade this one, if I do trade it, through euro sterling, and I'm more inclined to trade it after I know all the details on whether we're getting any breaks. If we're breaking, if it's a good news and we're breaking below 83, then that might be a trade I go with, rather than trying to pick a side in between. Top side 84, 84.20, we know the levels up there. So if we're breaking above there and it's holding, then maybe we've got a bit of a change in direction. But yeah, I'm more likely to play from a break perspective rather than try and run with anything at the moment. Right, Kat, I'm going to ping it over to you, mate.
Cheers, mate. I am going to Straight away look at what Ali was saying about the Euro Swiss. So Ali, first of all, you heard what we said about Schlegel talking that they are ready to counter bigger moves on to the top side in the Swiss franc still. I personally, Swiss has been trading with risk, but we are finding levels. If you look at that Euro Swiss in particular, we are starting to find levels, especially when we trade lower in 93s, where may not be a technical level at all, but we're seeing prior lows. And also, I do have the strong suspicion that S&P may do small amounts if we get anywhere much lower in whether it be in the Euro Swiss or the dollar Swiss. Now, there's a couple of interesting things. You were talking about a 200 moving average in the 4-hour, but there's also the 55 in the on the daily, which is just above 94, the figure around 94.08 today. And look, we have been trading in this triangle as well. We have tested the top side today, which is right around 94, 94.05. We are shying away from it a little bit, and that has to do probably with the limited confidence that people still have in the euro, perhaps. But it's an interesting triangle. So if you would start to break out of this, call it 94 figure 10 level, you are going to see probably a bit of a rally. And this is your 200, right? Around 94, the figure as well, 93, 99 it is at. But look, they have been trading this triangle quite a bit. For the time being, it's still respected. But I'd say, again, if we start to rally above there, you can counter trade it if you want to. But if it goes above 94 figure 10, I would not hold the position for much longer myself if you want to go short Euro Swiss. Now, I'm not a big Euro fan either. I must say that I've took notice of those little green shoots in Germany. So I would personally still be on the side where S&P may give a helping hand if we get back down there, and I would rather be on the other side of a trade. But yeah, it stopped right where it had to stop. So look at what's going on there. Yeah, you've got the 50% here around 94.20 as well. But that's going to be your limit of your pain threshold, I think, if it starts to break above this triangle, which is pretty interesting. I don't think, Ryan, you did look at gold already.
No, not in detail.
So
No,
okay,
it's all
okay. Yeah, thank you. It's all about extensions and theoretical levels, and you put a trend line which could take you there. I mean, you can do all of that. You can do all of that, and we've been running around trend lines and stuff, which is typical. You build the picture as the price action goes. Yes, but this is clearly trading the Trump version 2 and what happened in geopolitics. So I do think, though, and don't get me wrong, I think we can get like even another explosive run higher. And I'm going on to the daily. There's this big zone of extensions that I'm seeing just above 28.20, and the market may go and have a look in there into that zone prior to the elections, or even on month-end flows, because I've noticed that the metals also have month-end flows, and trading still this Trump version 2. But now we are seeing a little bit of a news that may hint at the Middle East situation calming down a bit. I would suspect that if we go into the end of the week, if we go into this zone, because it does look like somebody really wants to print 2800 there, and also looking at who's been buying, we have again seen the same thing as we saw months prior. Is the end of the US and the Asian session has been doing it. So it's really US players and the Asian market who is trying to protect themselves against a Trump election or red sweep. So, but I would suspect that if we see above there into the end of the week, into just ahead of the elections, that some of the front runners, because they have been running this front for quite a while now, that we will see some profit taking. That is what I suspect, because you don't want to stay in a full on long gold position, taking the risk that there is this small or smaller is still very tight in and will depend on some of the swing states. But imagine that Kamala Harris gets it. You don't want to be sitting long gold at 2,700 or 27 and a quarter or 27 and a half and just do nothing, because I think there could be in some selected instruments some serious setbacks. Yep, Joao, 3K. It is. You know what? If Trump gets in, it's probably your next stop. That is that is what I'm thinking as well. I think it's still the one of the trades that will keep people in it and continue to buy, especially if Trump gets it, because you will have issues with Mexico, issues on the USMCA, you will have issues with China and everything, and the Asians, I think, are going to buy the absolute crap out of it if we get a red sweep. But I don't think personally that we are going to get it just right ahead of the election, unless we get like horrendously bad numbers on Friday's job report. So that is one of those that really we need to keep a very close eye on going into the end of this week and going into the elections.
Just a quick one before you
Sorry?
shift over, mate. Just on gold, would you be
Yeah.
inclined to buy a Harris dip in gold? Because would
Sorry?
that really change? Would you buy a Harris dip if Harris
It all
wins? Would you
depends.
buy a dip?
It all depends. I think if we get a Harris plus a Republican Congress, we are going to see a setback just because of the name Harris is on top of the ballots. But then I might indeed think about going at it again, because both combined, it still won't be a good thing for stuff like China. Also, this one could be still a buy on dip, unless we get a full-on DEMS unless we get a blue sweep, of course. I think there are other instruments more interesting, perhaps. Oh, well, they're going to be equally interesting, perhaps, to trade, but perhaps we should be talking about them again closer to the elections. But we have been talking so often about this Mexican peso into the elections. This is one that is going to move like hell, unless we get a bit of a stalemate or so, or a bit of like, yeah, Harris just and the Republican government. But if Trump really gets it, I think we are going to be trading 22 in this one really quickly. If we get in turn a DEMS sweep, then we're back to 18. This has 10% move written all over it in the elections, I think, for the Mexican peso, for instance. And then we got dollar China, of course. Just and I'm going just to, and then I'm ending. Stick a dollar pair on it, and the dollar yen is an interesting one again, because we stopped right above those levels here. We virtually printed the prior high and coming back down. If you think Friday's job report will be strong, just bear in mind what we said at the beginning of the show, Ali. The weather can have a big impact on this week's jobs numbers in the US. So it's a bit of a lottery. So if you think it's strong, if it would come out strong, I'd qualify that in the at least temporary, before we then look at the elections. But I'd qualify that as a little bit of a surprise outcome. That is how I look at it personally. And then we could, in stuff like the yen, trade back up towards 154.5. But in the meantime, we need to respect the fact that we're coming back down. Fragile attempts to form a new government. Keep in mind those restart of the nuclear plants potentially. If all of that comes to fruition, also month end, which is I say be a bit careful if you're long dollars because it could be the other way. According to my own findings as well, so we could see a bit of a setback here, back into this maybe 151.5, 152 before the month is over on the dollar yen. So for the time being, I stopped buying the dips. And with that, Ryan, back over to you, mate.
Yeah, thank you very much, mate. Good stuff as always. We'll call that a day for today. Good stuff on your euro dollar trade, Jacob. Good to see you making some profit there. I hope you make plenty more after that. Right, have a good day, everybody. Stay safe over the data later on in this UK budget. Have a great day, and we'll see you all tomorrow. Well, not me, because I'm off tomorrow and Friday. So Kay will be your company for those 2 days. Have a good one, and I will see you after the weekend.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.